بسم الله الرحمن الرحيم الحمد لله والصلاة والسلام على رسول الله وعلى آله وأصحابه أجمعين. Assalamu alaikum wa rahmatullahi wa barakatuh. In this video I'm going to be making a quick introduction to a project that I've been thinking about for a long time and discussing for a long time. So I'm going to try to keep this short, inshallah. The summary. This project is a digital currency whose value is pegged to the gold dinar and which is backed by a real estate investment fund. And just a couple of background terms, definitions for those who may not be familiar with this. Tokenization means representing ownership of an asset on a blockchain. A traditional stock, which is shares in a company, would have its shares recorded by a regulated authority, while blockchains are cryptographically secured, and stocks are usually contained within a national market, while blockchains function internationally all over the world. And a stablecoin is a cryptocurrency which is pegged to an asset. Most stablecoins are pegged to the US dollar. Currency peg just means that the value matches another asset. So like Gulf countries, oil producing countries in the Arabian Peninsula, all of their currencies are pegged to the dollar. So they follow the dollar. If the dollar goes up, then their currency goes up. If it goes down, their currency goes down. And the peg is maintained by buying and selling their currency on the open market. So for example, Saudi Riyals, they will, if the price goes down, they'll buy it. And if the price goes up, they'll sell some. And to keep it always equal to the US dollar or tied to the US dollar. So of course the idea here is to peg it to the gold dinar. So the way this project would work is there would be an investment phase and a group of investors would get together and form an investment fund. So they'd pool money together, everyone puts some money in, and in return they receive a token representing their percentage ownership in the fund. In the next phase, which would be the purchase phase, the money in the investment fund is used to purchase some kind of real estate. I like the idea of purchasing agricultural land, but the idea is that this is a participatory project and anyone can have input and the group of investors themselves can participate in making the decision. That brings us to the next point, which is governance. So how is this decided? The concept is that there's a general consultative council, shura council, and the general council would elect officers of an executive consultative council, and that would include an emir. The executive council would be responsible for making and executing decisions, and membership in the consultative councils would be open to men only, and you would have to own a certain amount of the token to be eligible to participate in the consultative councils. The emir would have authority to make decisions, but he would have to listen carefully to all of the advice and opinions from the general and executive consultative councils. The emir would not have power to withdraw funds from the reserve. In cryptocurrency, there's something called a multi-signature wallet, which means that multiple people have keys, and it could be 3 of 5 have to sign it, or 4 of 7 have to sign it in order for any funds to be removed from the wallet. So it provides some security. There is a reserve, and not all of the money goes towards purchasing land. Some is kept in the reserve to stabilize the price of the token is one important aspect of this. And most of the reserves would likely be in Bitcoin because it's the most established and stable currency, cryptocurrency, and it can be used on the market to stabilize the price of this token. So the reserves could also be used to purchase more land or to cover expenses of the project. The peg, since fiat currencies are likely to become increasingly unstable in coming years, the token is pegged to gold. I think that tokens of this nature that will be important in coming years. 4.25 grams is the historic weight of the Islamic dinar, gold dinar. Currently is valued around 260 US dollars. It's much more stable than fiat currencies over long periods of time. Management. What happens with the land? Some of the reserves are used to work the land. This means providing employment to local people in the wherever it's invested. My preference is to conduct this project mainly in Afghanistan because there's a need for employment, and I think there's a good opportunity too, because I think there's opportunities to buy land at a good price. If it's used for agricultural production, it could be planted with long-term investment like trees or short-term crops like wheat or both. And of course, if the consultative council decides otherwise, it could be residential real estate like apartment blocks or whatever else, commercial, industrial. So the produce of the land, so I'm still just thinking agriculture, this is my preference. The produce of the land would be sold, and the proceeds from these sales would go first towards paying the salaries of the workers, the people who are hired to work the land. Additional funds would cover expenses like purchasing seed, fertilizer, tools. If there are any funds left over, it would be deposited into the reserves and could potentially be distributed as profits to the investors, and we'll discuss that a little bit later. So additional token purchases, if the token is popular. Now, if people are using this, for example, in Idlib right now, stablecoins, US dollar-based stablecoins, are one of the main ways of moving funds in and out of the region because there's no formal banking, which, alhamdulillah, that's a good thing, I think. But it would be nice if there was a project which was actually run by Muslims, for Muslims, that they could go to instead of supporting US dollar coins. So if there are people using this token, now not just investors, but people who want to use a stable coin, then this would increase the size of the reserves. So more people are coming and buying the token, and these additional reserves which are built up could be used to purchase more land or to make improvements to the land, which is already under management also. Value assessments and profit payout. As the land is improved, the value should go up. So if you plant trees, for example, mature trees, they have value for producing wood, for producing fruit, and the value of the land can go up with time, just as the market grows. If the combined value of the land under management and the reserves exceeds the value of the circulating tokens by a wide margin, new tokens could be minted or issued and distributed to long-term holders. And what a lot of projects do is try to create incentives to get people to hold the token, because this supports the value of the token. And this is especially important when trying to maintain a peg, because what can lose the peg is people panic selling. So you want long-term holders. So the idea is the profits would be distributed only to long-term holding wallets. And the longer a wallet holds, the bigger its profit share would become. This is not like riba or proof of stake even, because no profits are guaranteed. The profits just represent a share in the growth of the value of the assets under management. And there could be other sources of profits which are distributed. It could be from transaction fees. It could be from extra profits from the produce of the land, or a couple of examples. So in the event of liquidation, if the project shuts down, and this could be by a decision by the Consultative Council for whatever reason, or for example if the internet is destroyed in a major war or something like that, multiple physical copies of the ledger could be maintained so that the ownership of tokens can still be verified even if there's no internet access, and the land under management can be sold and the proceeds distributed to anyone who can prove that they control the private key, which they can prove their ownership of some tokens, and they would receive a proportion of the proceeds of the sale of the land proportional to their ownership of the total supply of the tokens. The main danger of a project like this is a panic or collapse which leads to a sell-off of the token, causing it to lose its peg, which can cause the market to lose confidence in the currency and lead to people selling more, and it turns into a collapse. Now, this can also happen as a deliberate attack, or it could just happen due to market conditions, whatever's going on in the market. And this can be mitigated by starting out with a small amount of land and a relatively large reserve, because the size of your reserve, that means how well you will be able to maintain the peg. It's important to ensure that a large percentage of the total supply early on goes to investors who understand the project, they understand the risks, they understand the importance of holding, and they're motivated to hold the token long term. And that will probably be for ideological reasons. As time goes on, it will be possible to collect data and see what the optimum reserve size will be. It's just will require some research. And in the event of a minor loss of parity with the peg, it's also possible to sell land in order to recover the peg. So you could lose the peg to some extent for a period of time, but sell land and recover the peg that way. So yeah, that's a brief overview of how this project would work. Jazakumullah khair. Wassalamu alaikum wa rahmatullahi wa barakatuh.